Hi guys, it's Noah from Surge Notify here, and today I'm bringing you one of the most powerful PD arrays in a step-by-step guide on how you can trade any time frame with precision and in line with the trend. So let's dive straight into it. First things first, the easiest way we can look at this is just starting on a monthly time frame. One thing I'd like to preach is the higher the time frame, the easier it is to read the charts. And as time goes along, you can slowly lower in time frame and become more precise on the lower time frames where there's more volatility. So what I'd like to do is we'll use the most recent price action over the last year or two on the monthly time frame to just go through what this PD array is and to look at how powerful it is. So let me just describe what the PD array is that we're looking at. So what we're going to be looking at today are fair value gaps that have been inverted. So what do I mean by that? Let me go on to the daily time frame and I'll show you, and then I'll break down the strategy that you can use to swing trade and make thousands of pounds every month. What we want to do is we want to identify firstly what a fair value gap is, and secondly what an inverse fair value gap is. The clue's in the name. An inverse fair value gap is a fair value gap that has been inversed. So what does that mean? That means that price has disrespected that fair value gap, and now we are going to use it to support price in the opposite direction of what it originally should have done. This is a great example, and I'll show you how we're going to use this in a moment. You can see here that we have a bearish fair value gap. Price should continue to push down from this fair value gap if it is to be valid. However, what happens? You see price pushes through, which shows a sign of bullishness in the market. We return back to this fair value gap, which is now an inverse fair value gap because price has pushed above it. And look what happens. We push straight back up into new highs. So this could have been a perfect trade for you here. Obviously, we need to align it with our higher time frame on the monthly. But just looking at this, you could have taken a long position here, and that's an easy 1 to 2 to 2.5. What we're going to do now, we're going to look at this exact same example because it works out absolutely perfectly. But firstly, we're going to break it down from the monthly chart. What do we do to start here? Very simply, we'll mark out our monthly swing lows and also our monthly swing highs. And what the goal is for us to move from swing high down to swing low and use it as a target, but also a helpful hand in determining the correct direction the market's going to go in. Let's have a look down here. What have we got going on the daily chart where this is a bit more in depth? First thing that I'm going to mention here is, as you can see here, we have our fair value gap. Price has continued to push up above this, so we do not want to use this yet. But as we can see, once price has taken out this monthly swing high and we have a clear break through this fair value gap, we revisit it the next day. You could have set your stop loss on the swing high that's formed here on the daily chart, targeted a 1 to 2 risk to reward, and that would have been a very, very nice trade that played out for you there. That's just one example. Let me carry on. Again, what have we got going on? We've got a monthly swing high taken out. What happens? Price pushes up, fair value gap's formed, we have a breakthrough, we come back in, test it, stop loss on the swing high, take profit a 1 to 2, and look at that. Again, you see how despite there only being a few trades in the year because we're on these higher time frames, this is incredibly accurate. What I would also like to mention as well is obviously we had a swing low down here on the monthly. You can also leave a partial position running to your swing low. However, I do want to just make you aware that, like you saw in this case, it doesn't always reach the target, and that's why sticking to a fixed risk to reward like this on a 1 to 2 is very, very efficient for something that you can use. Again, I'll break this down for you very simply. Monthly swing low taken out, fair value gap here that has been again disrespected. Place our order. Once we break through, we come back in, retest, stop loss at the swing low, and once again we achieve a 1 to 2 risk to reward. And just like that, 3 trades here and we've made 6 RR. Obviously, one thing that I'd like to mention is you can leave trades running for as long as you want, and one thing a great trader is able to do with a strategy like this is leave their positions running all the way for higher targets. As you can see, what was a 1 to 2 on here is now a 1 to 4.5, and what was a 1 to 2 on here is also now 1 to 5. Those are the beneficial moves that you can use. However, again, if you want to just stick fixed with your 1 to 2, there's absolutely no reason why you can't do that. But you can always leave maybe 20% of the position to run higher. Let me show you another example. again, just here, monthly swing low taken out. And if we go on to the daily time frame, look at this, it's our example from earlier. And as you can see, once again, inverse fair value gap. And look what happens. We push through, we return back in, stop loss at the swing low, 1 to 2 risk to reward. And as you can see, once again, another win. This is one of the great strategies that you can use just by using something so simple, right? Once again, this also ran to a 1 to 5. But this is one thing I want to preach to you, which is you don't need to be a very advanced trader to make a lot of money in the market. All you can use is swing highs, swing lows, and a simple PD array such as the inverse fair value gap to make thousands of pounds in the year. Obviously, you know, this is not that high of a trade frequency. However, if you have a lot of funding or a lot on a personal account and you put a heavy risk on this, considering the win rate out of these last 4 trades has been 100%, you can make a lot of money. So what I'm going to do now is I'm going to break down onto the daily time frame, and we can look at hourly trades that we can take on this to try and get more of a shorter time frame trading done using this strategy while still being accurate. Once again, we'll come into the price action of this month so far and mark out our areas. Daily swing low, again another daily swing low, daily swing high, daily swing high. What you're going to see in some cases is the strategy not working. With everything, you have wins, you have losses, and all it is probabilities. Let's have a look at what we've got going on. So our first daily swing low here, as you can see, inverse fair value gap. If you can see here, we close above it, return back into it. Once again, we can set our trade here, stop loss at the swing low, 1 to 2, and that is another win. Let's have a look at a few more examples for you. Now, with everything, you have wins and you have losses. As you can see here, we take out this daily swing low, we come back into this inverse fair value gap, but we are unable to achieve a higher risk reward than 2. We are still able to achieve a 1 to 1.5. So what you could do is you could set partial profits. One profit target at 1 RR, another profit target at 2, another profit target at 3, 4, 5, etc. carrying on. And if you can remember from our last trades, we had a lot that ran to 5, 6 risk to reward. Here's another example. So daily swing high taken out. Once again, we have a 1 hour fair value gap, break through it, return into it, just here. You can set your stop loss at the swing height, and once again that has achieved a 2 RR, achieved a 1, 2, 3, and this is what I mean about having your partial profit points. 4, 5, 6. So that's one thing to remember, is that these trades can run for a long time, especially if you're able to call the local top or local bottom of the market. Once again, in here, I believe this one looks like this could be a loss. Yes, this one would be a loss here, but you know, one loss is then followed by a 6 RR win, and if you're taking partial profits at every point, you're going to have a nice amount of profit bank by the end of that week, especially when you're on the lower time frame. And again, you can see it here. Anyway, thank you very much for watching, guys. I hope you were able to find value out of how powerful inverse fair value gaps can be in the market on both the daily time frame, the monthly time frame, the hourly time frame, you name it. Just remember your time frame alignment, so 4 hour, 15 minute, daily 1 hour, and then you can even do weekly and daily, or weekly and 4 hour is normally the best, and then monthly and daily. So remember your time frame alignment, put it into action and see how you get on. Thank you very much, guys.